we're going to get started now, and I'll just keep admitting people in as we go through. So basically what we're going to go over today, I'm going to try and keep all this as simple as possible. I'm going to try and give you guys just some tips on things to look for, my favorite types of patterns to play, and this is going to become a problem. And basically, we're just going to be going over chart patterns, and I'm going to try and make it as simple as possible and easy to follow. So I got my notes up here, just separating it down into my favorite patterns. These two are definitely my two favorite patterns. If you guys are unfamiliar with chart patterns, you can go ahead and screenshot this if you want and keep this. It's kind of hard to screenshot, but if you just Google chart patterns on Google, it'll pull this exact picture up. And this is just to give you a visual representation of what's going on. So basically, we're going to cover some of the ones that I prefer to trade and I like to trade the best. So first of all, a head and shoulders, inverse head and shoulders. These are considered reversal patterns, and they're probably my favorite type of pattern that I like to play. And so basically head and shoulders is exactly what you would think it is. So we'll go over what it is and then over a couple examples and how I like to enter into the trades. So for example, head and shoulders is a bearish pattern. So basically you're thinking that the stock or market is going to go down based on this trend you see. And one of the things I do want to make sure you note that any of these patterns we're looking at are completely invalid if you don't have levels. Like if you're trading, so say, like for example, if I pull this up, and this is a random stock, but okay. So if you have a pattern like something like this, and let me go to my tools. Okay, so let's say you have a bear flag. Bear flag is basically a move down and then some sort of consolidation here, and it will be consolidating. The price will be moving in between these lines here, and basically up, down, up, down, and so forth until it eventually breaks downside and continues going lower. So like an example of that would be right here. So I don't have a level drawn here, but it's pretty obvious that this is a level right here. But all in all, we've gone over support and resistance. If you guys haven't seen those videos previously, I'd make sure that you go and watch those, because all of these patterns are almost invalid if you don't have levels that you're trading based off of. So all of these patterns need to be with a support and resistance level. And when I say a support and resistance level, something like these, the horizontal lines that are on the chart. So basically the key is you need to find things that, or whenever you trade a pattern, it has to be with a level. So everything you're going to be trading pretty much is always going to have a support and resistance level in play. And that will help you give a better entry. It will help you have an understanding of where you're going to get out or where you're going to get stopped out and where your profit targets are going to be. So first thing we're going to go over is a head and shoulders. So the best example I can think of is if we go look at the weekly chart of SPY. I'm going to go to ES because it's a blank chart. Or actually, SPY is actually a blank chart. Okay, so SPY. And if you guys have questions, let me know in the chat. I'll be sure to answer them. So I'm gonna clear this off. A head and shoulders pattern is literally what it sounds like. So like it has a shoulder and then a bigger move up, which is going to be the head, and then a bigger move up or a smaller move up, which is about level with the other shoulder, and then ultimately breaks down. So what we're looking for is, it takes practice. All of these patterns is just going to take practice learning, but the key is the more you practice it, the easier it's going to be to see these patterns. So I'm going to draw this one out for you so it's made pretty obvious. So somewhere around here, right? There's a shoulder, and then look, ultimately we have this move down, right? So this is what you want to look for, and what we're looking for, most people take entries at the neckline, right? So this would be considered the neckline right around here, where it breaks down, or where it bounces here, comes down, bounces here again, and then ultimately breaks down and continues lower. So how most people are going to teach you how to trade this, or most like mentors, whatever, any people that you follow on Instagram or things like that, or groups you're in, most of them are going to tell you to enter on the break. I personally do not play that way. I don't play on the break. I play I try to get in before the actual move happens. So when this breakdown does happen, we have a premium pop in the options and I get out. I'm not looking for the break. I want to be in before all of that happens, and I want to be in before everybody else when premium is lower on the stock and not as many people are going to be in. Like, for example, so basically I'm anticipating the move. That's the whole objective. So like personally, if I was going to enter in a trade like this, I would be looking for something like this. So we have the move here. We have the move down. Oops, sorry. We have this move down here, up, back down. This is where my entry would want to be. This is where I personally take entries on my Head and Shoulders. And this is where I like to enter. So that's just a personal preference of how I like to do things. I like to anticipate the move because you can kind of tell once you get going, learning certain patterns, you'll see the shoulder, you'll see the head, and then it will just become more and more obvious as you do it. And then sometimes you might miss this whole shoulder, but that's okay because a lot of people will play this break anyways. But my whole thing is I like to get in before other people are in. And so I get in at a lower price. I want to get in as low as I can with good confirmation. So then I wait for, okay, so this was a level. This was a support and resistance level, if you can tell. So reason why I'm saying it is because we're looking at a weekly chart. That's how I play all of my levels. I play all weekly time frame charts, and base my levels on those. So take a look here. Shoulder comes up. This is where it was rejected. So this is where the first shoulder was created. Okay, so we have a move down and then we have a move back up. Now look at how it holds it here. Holds. It acts as resistance and support. And then we're having price action. It breaks below, retests it, comes back down, and then we have an ultimate retest. And look at how perfect that retest is. This is where my entry would be. This is where I would want to get into the play. And I have all this downside. And what I like to do is I take my position here. I'll cut if it goes above here, above this level, the 453 level. But then ultimately the whole thing is that I'm looking for this move down to catch it down to 414. I'm going to take off most of my profits, and then I'm just going to let the rest ride. I'm going to let the rest just happen and play out and see how it goes. So I'm not even looking for the move that everybody else is mostly looking for. I'm looking for the move before the move, right? I'm looking to be up a few 100% before everybody else is in the trade. So I hope that makes sense. Let me know if that doesn't, or if you have questions on that. So this is the concept of the head and shoulder. So you got the shoulder, the head, shoulder. All these are just going to take practice and learning and understanding, but that's the basic concept. And most people are going to play the break here and are going to play this downside here. I'm not in for that. And let's say, okay, different scenario. I don't get in at the shoulder and I completely miss it, right? I'm looking at other things. I'm not paying attention, or I just don't notice it, right? And so we have this move down. The only other thing, I will not play the break. I will not play the break because the premium is going to be too high on the contracts. The market makers know they price the contracts. So basically when price breaks down from a head and shoulders, everybody knows it's a head and shoulders. That's why people are playing it, right? That's why it has this move down. So basically you want to be on the smarter side of that. What they're going to do is a lot of the time they're going to have a breakdown, a nice little move, a come back up, and then it's going to retest the level that was already there. And then it's going to have its ultimate breakdown. The only times I'm going to play, I'll show you. I'm going to highlight my two entries that I would take on patterns, right? I would take this one and this one. I either take the anticipation at a very safe spot, or I take the play on the retest, and that's all I play. Those are the only two options I have for myself when I'm trading in like any sort of pattern. So whether it's bull flag, bear flag, whatever that is, I'm anticipating it, or I am getting in on the retest. I will not get in during the play. So that's just my own personal preference on how I choose to get into a trade, right? And so I'm gonna move the chat over here just so I can see it, just in case. Okay, so that's the first thing. That's Head and Shoulders. I love Head and Shoulders. I'll show you guys another. So, inverse Head and Shoulders, same exact thing, but literally it's inverse. So like this is a bearish pattern, right? So you would play puts on this. And what I do it when I play inverse Head and Shoulders. So these are my two favorite patterns, I would say. Like I was kind of thinking over the weekend, like what are my favorite setups? I would definitely say Head and Shoulders and an inverse Head and Shoulders. And then also a double bottom and a double top. Because these four here are considered reversal patterns, meaning this price changes its overall direction based on these patterns. That's the whole goal. You're going to catch a reversal on the whole stock. So like, for example, you have this huge run up, ran up all past COVID, run up, and then there's a reversal that happened. I like to catch the reversals because that's the biggest risk to reward to me. That's the biggest potential that is going to happen. Now they're more risky because you don't know what's going to happen for sure, but the payout is much better if you are able to manage your risk. Okay. So this is a Head and Shoulders. See how they look similar? Easiest way to get better at charting patterns, just print this out, print something like this out, just Google stock chart patterns and print this out and then look at it. Just have it sitting next to you whenever you're charting. And you're like, okay, this might look like a Head and Shoulders. Pull out your little chart and just go over it and make sure like, okay, does it check all the boxes and match the same criteria, right? And you don't need to follow the stop entry, things like that. That's just what they created. I don't follow that. Like I told you, this is how I would play it. Okay. So the next thing we're going to go look at, and this is a little tidbit for you guys that I noticed over the weekend. I'm very interested in Chinese stocks right now. And reason being because all of them are setting up in an inverse Head and Shoulders. Okay, so inverse Head and Shoulders. We've got the move down, complete opposite, same concept. It's a reversal pattern, but we're looking for the move for the stock to completely change direction. Changing the context of the whole move. Okay, as you guys may know, I did alert that I got into Baba calls. October expiration. And basically what I'm looking for is I saw this setting up. This is where I'm getting the trade from, right? So shoulder, head, shoulder. Here's the neckline. It's not completely flat. It could be. I mean, it would be the same exact thing. This 122.53 level could be that, but I'm playing it. I just drew this. I guess I don't really need it, right? But I like it. I'm gonna keep it. Okay. Anyways, so look at this is what I'm looking for. So I told you this is how I like to play my entries. There's the shoulder, the head, and then now I don't know for sure that there's going to be a shoulder, right? I don't know that that's for sure, but this is the move I'm ultimately looking for. And my price target is 120. I'm looking for this to form the shoulder, take profit here and let the rest run. And that's the reason why that's how I feel like this is the safest entry for me. And I'm going to cut it under 90. That's usually probably how I will run this and look to play this. But I'm trying to catch this move here before anybody else is getting ready to get in. And I also have other cues that are giving me the idea that this may happen. This may play out like this right here. This is an inverse hammer, which is a bullish candlestick pattern. It's just something you got to practice and learn and get good at, and you can recognize these things on the fly. So this is the reason why I got into Baba. So I'll give you another example, something I'm looking at going into tomorrow. Same exact thing. Chinese stocks are looking like they're going to run. So inverse, Head and Shoulders, forming that right shoulder here. And then look, we got a gap to fill right where the neckline is. That's about how much we got left. We got to move close to up to $30 here, a $7 move. So this is the same concept, inverse head and shoulders. So let me know if you have questions on that. I think it's pretty self-explanatory, but I told you how I like to get my entries, and that's usually how I like to play it. Okay, so there is a ton of different names for patterns. I do not know them all, nor do I care to know them all. There is a thing as knowing too much. And the thing is like people will say, oh, that's a bear flag. No, that's a bear pennant, blah, blah, blah. Like they're the same thing. Like, for example, these three things are pretty much the same exact thing. What do they tell you? That this is probably going to be bullish. Falling wedge, ultimately I think it's going to go up. Bullish rectangle, ideas is going to go up. And then bullish pennant, ideas is going to go up. It doesn't really matter. You don't need to know these like the back of your, like you need to understand the basic concept of what these patterns mean. Okay, look, rising wedge, pretty much the same thing as a bearish pennant. They're not much different. So don't try to overwhelm yourself and confuse yourself. Just simply play the patterns just play what it looks like. You understand the concepts of these. So once you do, then you can be able to make decisions. So like, for example, look at this one, the symmetrical triangle, look at the bearish pennant and look at the bullish pennant. They literally almost look like the same exact thing. So it's like, why even waste your breath on trying to figure it out? Just play the pattern as it is. Take the context. You don't need to know every single name of every single pattern. You just got to be able to recognize them. That's all you got to do. It doesn't matter if it's a bullish pennant or a bear flag or whatever these names are, just understand the concept. Understand the concept of these chart patterns that you're playing and use them to the best of your ability. Okay, so for example, let's see if I got another example here. If you guys have good examples of things you like to watch or stocks that you're looking at, let me know and I can go over those if you have good candlestick patterns. But the next thing, or chart patterns. So something I want to go over is a double bottom. A double bottom is an easy concept to understand because it just is. And I'll explain why. Okay, so reason being is because take a look at this. Okay, this is a perfect example of a double bottom. Reason being, basically the concept of a double bottom is it's a reversal pattern. Okay, and basically what it means is it comes down to a price and bounces off it both times and doesn't make a move lower. And price reverses and makes a move upward. So this would be that example here. Came down to this about $60 level and bounced both times. And then it had a massive move up, almost a 50% move in the stock. Do you think Tesla will hit 870 again? Okay, yeah, I'll go over that in a minute because I do like that pattern for a setup. And I'll explain to you guys the trade that I did on Tesla on Friday. Okay, so basically the concept of this double bottom, it basically means that the stock is refusing to go lower. So you understand the trend. Obviously, this trend here is down, right? Obviously, the stock is heading downward. And what's it making? It's making series of lower highs and higher lows. I always say that wrong. My bad if you don't understand what I'm saying. But okay, you can see this. So made a low, lower high, made a new low, and then came up, made another lower high here, came back down and couldn't make a lower low. See that? Are you guys following me on this part? It's basically signaling sellers aren't in control anymore. They can't push the price down any further. So that's the concept of why I played this, or like why you would play this. Sellers are not letting it go lower. So the obvious next move is up. The sellers aren't pushing it lower anymore. Buyers are stepping in. It's not going to happen. Okay, so that's the concept of a double bottom. where price refuses to go lower than a certain point and then ultimately changes direction. Now, where typically most people will tell you to play it is the same quote unquote neckline. I do not play the neckline. I do not do that personally. I anticipate the move on these, especially. I don't like to get in here. If I would have seen this bullish candle here, I would have definitely got in here. That's where I would have most likely entered. So most people will tell you to play the neckline where it came up to and rejected ultimately, and then you get in here, see how it came down and retested it here, and then moved up. No, that's missing more than half the move. I'd rather be in down here and hopefully anticipate it, and my stop will be right below the lows. That's how I trade that. I anticipate the trade. Now, if I didn't catch it, I would have caught this retest. That's how I would have done that. Okay, so that's the next thing I'm going over. Or the next thing I'm going over is double top. This one hasn't necessarily played out and could be a triple top, but the concept is still there. You can see where price refused to go higher on an uptrend and then ultimately rejected and moved back down. This would be considered the neckline right about here. And this is where typically people would get in. Now, this is where it comes in good because it didn't necessarily play out, but it still would have came down and hit our profit target. So I like to anticipate it, and I would get in somewhere here where it's having these large wicks and having strong rejections. That's where I would like to get into these plays. So I like to anticipate the move rather than when they tell you double bottom, right? Here's the neckline. We go back to Baba. Same concept. Double bottom, there's the neckline. That's where most people tell you to get in. I'm not interested in doing that. Same thing with the inverse head and shoulders. They'll tell you to get in at the neckline. Let me move over and show you guys that again. They're telling you to wait for this move up, have a and break, and then get in. That's not where I like to get in. I like to anticipate the move because I'll be up a few 100% by the time this move comes. And premiums, once it breaks, is going to be jacked up anyway. So I'll be able to take more profit anyways. And I will be out when everybody else is looking to get in. Or I'll trim majority of my position and let the rest ride and see how far it goes. But okay, so most people are going to, or most places are going to tell you to get into the neckline. I'm telling you that's not how I do it personally. You can do it however you want, but that's not how I play it. So you go look at Pepsi. Same concept. Has a move here, has a move here. I'm looking to get in up here on the second rejection. It's refusing to go higher, and I'm getting in on their second rejection. Okay, so double bottom, falling wedge. Falling wedge is a pattern that I like, and this is one that I called out to you guys last week, and I completely forgot about it, and I didn't play it. I put it on the watch list. I saw this hammer here. See, it's refusing to go lower, right? And then see this big move we had up. This was almost a 10% move. So this would be a lot in the options market. So basically, this is a falling wedge. What it is price is moving down, consolidating down after a large uptrend. And then basically price gets tighter and tighter and tighter, and then it finally explodes out. That's the concept for this here. So price has a big move up. Price has a big move up here, move up, and then consolidating down. And then once it can't move lower anymore, this is where I like to get my entry. I don't wait for the break. I see that price can't go lower anymore. And that's where I like to take my entry. So let's see okay, so see, entry here on the falling wedge, right? Entry would be here. I'm saying I like when I see that price can't make a lower low, and it's giving an indication that price is going to change. Like, for example, you can see here every time it's making lower lows. It's making lower lows. Right here, look at, we consolidated for 11 bars, so almost 12 weeks, 4 months. We almost consolidated for 4 months based on this here. We've consolidated for 4 months. You can see there's a consistent trend of up and down, higher lows and or lower highs and higher lows. And you can see it's a consistent trend.
roll over to 35, one roll over to more.
Hey, can you mute yourself, please? Oh, wait, I got it. No worries. Okay. So that's the basic concept. We're identifying the trend to be able to get into the trade sooner. I hope that makes sense. So that's the same concept here. Okay, so that's a falling wedge. Have a move up. Price gets tighter and tighter and tighter, and then has a move up. Okay, so bull flag. Example I like to show is Tesla. I saw you were asking about Tesla. So this was on the daily chart. Tesla has a bull flag. So it's not going to always look as perfect as these, right? But you're looking for the same concept. You're looking for price to have an impulsive move up, which is what this is. Impulsive move up, and then some sort of correction. Price comes down, has a little bit of a correction. And yeah, so this is what a bull flag looks like, basically. This is the whole concept of a bull flag. It's basically an impulse move up. It doesn't need to look perfect all the time. I can show you another one. F. Price has an impulsive move up, consolidates for a while, breaks out. Same concept. That's all the example. Okay, here's another one that happened before close on AMD that I remember seeing. Impulsive move up, consolidation. Now it's either going to break up or it's going to break down. But you can see, look, when I draw this, looks pretty similar, right? Let me see if I can get it out the way. Same concept. They don't have to look perfect, but the concept has to be there. Now, where would I take my entry on this? I would probably get in as it's consolidating, trying to get in near wherever my level is. So like I would need to find my support and resistance levels first before I decide to get into this trade. I'm not going to trade this in thin air. Like right now, this is in thin air. I don't have any levels drawn for it. So I probably would not end up taking this trade. Now it is right near $100. So it wouldn't be a terrible idea to play something where it's right at 100 and playing the break upside because it's above a significant level, $100. Okay, let me know if you guys got questions on that. But so I'm going to break down what I saw on Tesla a little bit. So basically, I saw we had a flag on the daily. And then I saw we had an impulsive move, or I saw we were forming this flag, right? And then I broke it down and went down to the hour time frame. Now, do you see what we got here? Tell me if you can recognize this. And look at the move we had up. Inverse head and shoulders, but zoom out, go to the daily time frame, and check this out. Bull flag on the daily time frame. You zoom in a little bit, closer time frame analysis, perfect inverse head and shoulders. So a lot of you guys were asking me how I caught this move on Friday. My entry, I had a level drawn here. I had a level drawn right there. I redid my levels this weekend, so they're not the exact same anymore. I took off a lot of levels, but basically what I was looking for, okay, see how it came down and here's the shoulder, right? This is supposedly supposed to be another support. So this is where it should come down to a similar spot. Shoulder, come down to a similar spot. That's how you notice what an inverse head and shoulders looks like. So this play that I took, I entered in here after this first 15-minute candle where it came down and tested this level. I'm gonna clear this off so it makes a little more sense. So on Friday, the trade that I took, I entered in. I was looking for, so the night before, I saw inverse head and shoulders. I saw the bull flag on the daily, and I used the context of both of them. And so I saw it couldn't make a lower low here, right? Had to move up, inverse head and shoulders, and I got in here. Contracts were $130 at this point, and at the end of the day, they were worth $1,500. So it was a 1,400% gain. So that's the only difference. Now, most people would have got in here, and you probably would have made a nice $500. But the difference is because I got in at the shoulder and anticipated the move, this was $130 and went to $1,500 by the end of the day. One contract. So that's the difference. That is the difference. So when I looked at this and I said, okay, I looked at the price of the contract when it was here, and it was about $600 a contract. When most people are telling you to get in on a normal play, I'm already up 500%, and I've took most of my profit and I'll let the rest ride. That's the difference. So I hope you guys are getting the concept of anticipating these plays rather than getting in on the break. I'd rather know down here that it's not going to work out than be up here and pay way more for a contract for a less good move when I could have taken this whole thing here. This is 600%. The contracts were 130 here, had to move up, and now at that point they were worth $600. So I guess 500%. That's the concept. So I got out before I even needed, before everybody else was trying to get in. So now that we have this break, everybody else is trying to get in. What do you think is going to happen to the premium of the stock or the option contracts? The premium is going to be jacked up. Like, people are going to be buying the contract. There's more demand for the contract. And then boom, the price without the stock even moving, the price of the contract is going to move up because more people are going to want it. There's going to be more demand in the contract, and that's going to increase the price anyways. And then when it moves up, you're going to make even more money when it goes up as well. So that's why I anticipate moves. I'd rather anticipate it than try to catch the break, have jacked up premium, and yeah. So that's really all I got for you guys. So basically understanding these patterns here, head and shoulders, inverse head and shoulders, double bottom, double top, falling wedge is one that I play a good amount. And then bear flags, bull flags, symmetrical triangle, I put them all in the same category. It just depends on the context. I'll give you one more example of what I played earlier this week, AMD. I did play this breakdown. Oh, where is it? Let me see if I can find it. I honestly don't remember. Oh, it was this one here. Here's a bear flag. This was the move I played. Oh, no, it was this one. Sorry. Okay, look. Symmetrical triangle, bear flag, whatever you want to call it. This is the perfect setup you want to look for. Level here. Consolidating under the level, it already broke it. You saw it, rejected it once, twice, and then, okay, all I did was play this. And in a matter of an hour, I was up 40 to 50%. I took profit at 45%, I believe. But yeah, this is the same concept. I'm looking for the context. It doesn't matter. This is a bull flag, pennant, whatever you want to call, or sorry, not bull flag, bear flag, bear pennant, whatever you want to call it. Understand the concept. Consolidation, and then it's under resistance, it's going to break down, or just get out the play if it breaks upward. This is a whole lot more that you could take from than if it breaks upside. I was risking like $20 a contract to make potentially 100% on the contract. That's the whole concept. Another example, I'll give you one more. And then if you got questions, let me know. Resistance level, shoulder, shoulder. There's the head. This was the lift puts I played. Move down. It's that simple. Filled the gap. This was 100% play. I didn't want to swing it, but I know some people did and ended up going 100%. But yeah, the same concept. It's just rinse and repeat. You got to have a level, you got to find your support and resistance, and then you take, or you find your patterns and then you take the trade. And yeah. So one guy asked, do you think Tesla will hit 870 again? Like go back down? No, it looks, I think, well, maybe at some point, but like, I think it looks extremely bullish. Like, I think yeah, the chart looks really good. I think it's going to make another, like bull flag breakout. It's ready for a next leg up. It's what it looks like based on the charts. What app do you use for analysis? Thinkorswim by TD Ameritrade. That's where I take my trades, and also chart. That's what this is here. This is what this is. 3 indicators you recommend. I do not use indicators. I use the squeeze here. And that's free on Thinkorswim and on most platforms. I use the squeeze. I used to use a stochastic slow. I stopped using that as much just to make my charts cleaner, but this is the only indicator that I use. And the rest I kind of just I don't use indicators. I use support and resistance, and that's in chart patterns. And like, for example, this was another reason I got into this trade. So this is where I entered. And I also saw this forming on the squeeze. And this gave me another reason to enter. It's going to slingshot, momentum going upward, and that's how I decided to play that. Well, I appreciate it. I'm glad that you learned something from this. Let me know if you guys have questions, but this is pretty much it for me. Last thing, I want to go over the one, or like just recap. These are the patterns I like to play. I like to play this one, double top, head and shoulders. I don't like to play rising wedges. I lose them way too often, just personally. Double bottoms, love to play it. Inverse head and shoulders, love to play it. Falling wedge, same concept as bear flag, bull flag, whatever. You just got to understand the context. Same thing for falling wedge. I play this one. I play this one. I play this one. All 3 of these are pretty much the same thing. All 3 of these are pretty much the same thing. All 9 of these are pretty much the same. It just depends on the concept or the context. So that's really it. If you guys have questions, let me know in the chat. But that's really all I got for you guys. Let me know if you have more questions, and we can definitely do another webinar on this if you do have questions later on. Let me know. Thank you guys for coming. And yeah, have a good night.